If you've taken an A+ setup trade before, however, before it reached your profit target, it stopped you out and it seems like the market is against you, in this video, I'm going to teach you a simple concept that will help you lose less trades and stay within the trade to reach your profit targets. Before we get into the video, next week, January 2nd, 2024 is one of my most anticipated videos on my YouTube thus far. It will be my face reveal and my complete journey on how I went from $0 to $100,000 a month trading. I'll show the complete process and exactly what I had to face when I was trying to become a full-time trader. So make sure you have your popcorn ready next week and let's get right back into the video. In today's video, we're going to be going over the 84% rule concept. Now, this concept is very, very important because a lot of people don't understand the 84% rule. However, they still use the 84% rule. They just don't know they're using it. So after watching this video, I hope you'll be able to identify when you're using the 84% rule and how to effectively utilize it within your own trading to increase your win rate. What is the 84% rule? Well, the 84% rule states that if a trade within your system does not work the first time you take it, the second time the stock comes back to that level, it should hypothetically work 84% of the time. In this example here, we can see the 84% rule. Let's say we're trading a break and retest strategy. For this video, we're simply going to be trading the break and retest setup. As you guys know, that's the setup that I trade the most. In this example here, we see this white horizontal line is a level of support we were supposed to hold. The red line represents our stop loss and the green line up here represents our profit target. The first time we took this trade on a strong hammer candle confirmation after breaking out and then retesting that previous level of support, we see that we never got up to that profit target and we actually got stopped out of the trade. And if we didn't know about the 84% rule, we would have taken this loss right here, right? Even though it barely broke below our level, we still would have had to stop out and respect our stop loss, and then the trade would have worked out extremely well within our system, and you'd be left confused because you don't understand why you got stopped out and then the trade worked extremely well. This has happened to so many traders, and especially when this happens to newer students that I work with, most of them get very, very mad and frustrated that they got stopped out before the trade went into their favor. Well, to eliminate this, we can use what is called the 84% rule. This rule simply states that when the stock comes back to the level that we were simply going to enter in before, we can enter into the trade again with the same criteria that we have before, same stop loss, same profit target, and 84% of the time, if the criteria is the same, we get the same break and retest, we should get the 84% rule, which means the trade will work 84% of the time. Now, it's very important to mention that this needs to have the same criteria. So let's talk about it. Why does the 84% rule work? Well, there's three reasons. Number one, your entry and stop loss was poorly executed the first time. Therefore, for your first trade, your entry was either too quick or your stop loss was too tight. In the previous example we saw, our stop loss was simply too tight, and therefore we got stopped out of the trade. However, the second time we enter with the 84% rule, our entry is the exact same, but our stop loss is the same after it already swept that liquidity, and that's why it works. Number two, your thesis was correct. So in our previous example, we saw that we had the right thesis, right? We had the right thesis for the trade. However, the trade stopped us out and then worked. And therefore, if you do have that correct thesis and you understand which way the stock's going to go based off of your system, sometimes your execution just might not be the best. And therefore, it's very important to understand that you can always re-enter after getting stopped out. Finally, number three, fake out liquidity for retail traders. This happens more often than not where you're going to get faked out of the trade and then it'll move in your direction. I have a full video explaining fake out liquidity for retail traders. If you want to learn that concept a little bit more, go check out my video on fake out liquidity. So how do you use the 84% rule? Well, there's three steps. Step number one, have a proper thesis based on your setup. You need to only trade your one setup. I recommend this in every single video I've made. Only have one setup that you trade every single time. Until you're a profitable trader, only have one setup and really perfect that. If you do have that one setup and there's a trade that presents itself with a proper thesis, enter that trade, of course. Step number two, after getting stepped out, do not enter right away, reevaluate. So let's say you took that first trade, you had a proper thesis in mind, however, you got stopped out. The 84% rule doesn't mean that you just re-enter right back into that trade right away, right? That is the exact opposite, actually. After you exit, make sure your emotions are in control, make sure that the trade was actually an A plus setup, and then reevaluate that trade and understand why it didn't work. And then step number 3, enter with the exact same criteria needed as a first trade. So when we see the trade coming back to that previous level after stopping us out and let's say retesting, enter with the exact same criteria that you needed as a first trade. So for example, the break and retest setup, the criteria we need is a break of the level, a retest with a strong hammer candle, our profit target at high of day or a key level, and our stop loss below the break of market structure. And we will enter in with the exact same criteria that we did on the first trade. So now that I've explained what the 84% rule is, how it can help you in your own trades, and I've explained how to use it, let's go look at some real examples to really help you understand this concept. In this example here, we can see a clear uptrend being formed on NQ. We see a brand new high here. And then if we play out this trade, what we want to see for our trade is a break and retest. What we see here is a break of that previous level that we had, right? This previous high. And then we see a retest with a very strong hammer candle. We could enter into this trade right here, looking for that 1655.50 level for our profit target, and our stop loss here can simply be a little bit below this previous pivot low. Now, this gives us a 2.06 risk to reward trade. Let's enter into the trade here and see exactly what happens. And unfortunately, as we can see here, this trade did not work out and we did lose $1,900 on this trade because it did not work out. Now, we're going to stop out of the position here. And now what we're going to see is the 84% rule being created. So we need the trade to come back into that 16,510 level, retest that level with a strong candle, and we will look to re-enter. Until then, we do not look to enter. So as we can see, for step 1, we entered on a proper thesis of our trade. Step 2, we step back and we reevaluate this trade. We understand why it didn't work. We understand that the market did push it back down. And now we're going to wait to see if we can get another retest of that level. Until then, there is no trade that I specifically see. Well, what do we see here? We saw that we broke back below. We came back to that level. We broke it. However, we could not hold that level. However, this time when we broke that level, we did come back, we held that level, and we retested with strong candles above that level, which shows us a break and retest. Now, what can we do? We can use the 84% rule again. So all we would do is enter into this trade exactly how we did before. So we enter into the trade here, looking for that same profit target, and our stop loss is going to be the exact same. However, this time, because of where this candle closed, this actually gives us a 2.45 risk to reward trade. So let's enter into this trade here and let's see exactly how this trade plays out. Now, as we can see here, this trade actually did work all the way to our profit target. We had the same level of risk. However, we used the 84% rule with our same criteria at the same exact level. Now, with the 84% rule, we were actually able to catch this whole move and make $4,100. On the first trade, we see down here, we lost $1,900. So if we flatten this position based off the 84% rule, because we were able to catch this trade, we made $2,200 on the day simply by using the 84% rule. Now, I hope this example made sense. Let's go look at one more example to really solidify this concept. On this example here, we're on SPY, and what do we see? Well, we see this previous resistance level that we had to break out of and then retest this level. We see the breakout and then we see the retest with a very strong candle, right? This is a very, very strong bullish candle that we can enter in for, looking for our higher profit targets. So the way I would enter this trade is I would go for a long position, enter in here, looking for that 464 psychological number. And our stop loss can simply be a little bit below this previous structure right here, the one we consolidated at before we actually broke to new high of days. So our stop loss can simply be right here. And our profit target, of course, is at that 464 level. Now, this trade right here, if we were to enter, gives us a 6.94 risk to reward trade. This is our first trade that we're taking. So let's enter into the trade here and let's see exactly what happens. We made a new high. Our profit target is a little bit further up here. And unfortunately, right here, we did actually get stopped out of the trade because this candle closed below our stop loss. Now, this resulted in a minus $210 loss. So we're going to flatten out this position here. Now, it's super crucial for you to understand that you do not want to re-enter right away. Now, what we're going to look for is, once again, a break above that 462.75 and a proper retest. We have to reevaluate, right? We cannot simply re-enter right at the break. We have to wait and we have to let that retest occur. So let's keep playing out this trade and see if we can get the 84% rule. Here we can see we broke back out above that 464 level. And right here, we have a very strong retest on that 462.75 level with the hammer candle. So what can we do here? Well, we can enter into this trade using the 84% rule like I've talked about. The way we would enter this trade is we would once again enter on this hammer candle, looking for the exact same profit target with the exact same stop loss. However, because this candle did close a little bit below that previous candle, this gives us an 8.0 risk to reward trade. So we're going to enter into the exact same trade. We see that this fits our criteria perfectly. It was a break, it was a retest, it was a strong candle, and it's at the exact same level with the exact same profit targets and parameters, right? However, this time within the rule, it should work 84% of the time. So let's play out this trade and see what happens. And just like that, as we can see, we hit our profit target there for that 464 psychological number, and we made $1,220 on that trade using the 84% rule. So if we flatten this position because of that $210 loss from earlier, we made $1,010 on the day by using the 84% rule. Now, of course, the 84% rule is not going to be some magic hack that every single time you enter a trade in your system and it comes back to that specific level, it'll work every time. No, that's not how it works. You need to have the criteria from the first trade and second trade be the exact same. And this should help you because sometimes your earlier stop loss may have been wrong because you don't understand market structure, or the market would simply use your stop as a liquidity grab to move to the next levels. As we talked about before in earlier videos, retail trader stop loss usually are not proper market structure breaks. In this video, I did that on purpose to show you guys that if you do get stopped out, how to re-enter into the trades. Now, of course, these examples were hindsight. However, if you want to actually learn my complete strategy and see how I use these type of concepts in real-time trading with all live sessions recorded and trade reviews, plus learn my complete strategy from absolutely zero, make sure to join that waitlist down in the description to join the mastermind. Other than that, if you have any questions, make sure to put them in the comments down below. If you enjoyed this video, make sure to leave a like, make sure to follow me on Instagram and Twitter, and I'll see you guys next week with a brand new video.